everyone. Welcome to another installment of Wilson Financial Podcast. This is completely and totally dedicated to the tax season that is quickly approaching. So I brought on my brother that always represents real love. We got All Real here in the building.
Hey, what's up, everybody? Like he said, I am his little brother. He didn't want to say that, but I'll say it's my big brother from Langston University. And oh yeah, I gotta look at the camera.
Yes.
Yeah,
He's like,
camera, bro.
Thank you, man. I'm just looking at
It's
the
all
setup
good.
right now.
It's
can
all
we
good.
can we do
Understood.
another?
It's first time. We're gonna
Nah,
keep it
keep
rolling.
all that.
We're gonna keep
Keep
it
all
rolling.
that.
It's all good.
But hey, what's up, everybody? My name is RL, graduate of Langston University, HBCU in Langston, Oklahoma. But yeah, been doing taxes for about 6 years now. Started at Jackson Hewitt in Guthrie, Oklahoma. Whew,
You was in the cut out there, boy.
Guthrie, but made the transition to Houston. Shout out to Terry Lee, Carmen Wilson, love y'all. But now I'm here with my brother, feeling right, feeling good, and let's tackle this stuff for y'all.
Yes. So you're gonna see us going in and out, back and forth to the computer because we want to give you factual information. Yes, we do know this information, but it is a lot, and sometimes we want to make sure we're regurgitating the correct
Yes.
information because we want to be transparent when it comes to people and their money because ain't nobody like funny money. So we want to be true to it. Just quickly before we get into it, thank you guys for joining once again. You can always find Wilson Financial on Apple Podcasts, Facebook, YouTube, and you can join the Patreon where we'll be uploading exclusive videos as well, as low as $5 a month. So the first topic we're going to get into when it comes to these taxes. I mean, taxes are a wonderful, wonderful thing. But when you start the foundation, what is it that we got to do? Whenever you get that first job.
I was
the
about to
first
say,
thing-
gotta get a job.
Yeah, gotta get the JOB now. So when you get that first job, what they hand you is a W-4
This
form.
is crucial.
So this is going to set you up the right way. If you're making mistakes, please change it for the upcoming year. It's all right. 2019 is over. But 2020, you can start on the right foot.
Let's
So
have clear vision, y'all.
yes.
I gotta see you.
So the W-4 is employees withholding allowance certificate. So basically, what you want to do is, of course, know how to spell your name, middle name, last name. You know, that's in the one box. 2 box, put the right social. That is extremely important. Extremely important. Because
Yeah.
when you get the filing and it ain't adding up, that's not good. Of course, your home address, and then the box number 3 is, I'm gonna say what I always suggest, and then we're gonna let professional go ahead and talk about box number 3. So I always suggest everyone do single. My standpoint is, married or not, single. Why is that? Because you're paying the most into the IRS, to the government. They take the most out, so that way you can always ensure that at a minimum you're gonna hit 0 or you had that overpayment when you start filing and claiming your deductions. What do you have to say about that?
I completely understand where he's coming from. If you're legally married, though, you have to put married, because that's not gonna swing. Now, you can put married and then file married filing separately, but that's really no tax benefit to you or your partner or your family. But like I said, I understand the reason why you would put single, but as far as your number of allowances, you can put 0 even if you're married, and that'll take the most out of your check. So either way, I get the mindset of by putting single, but it's the number of allowances. You want to have it at 0, especially if you're single, because it's going to take the most out of your check and give you the highest refund you can possibly get, depending on, of course, all this other stuff that we have to get into, the number of kids you may have, if you have kids, especially if you married filing jointly, there are tax benefits for that as well. But
So quick question. So you always say go with what your relationship status is.
yes,
So would filing single be a negative impact? I mean, not filing single. Would putting on your W-4 marking as single and then you end up filing jointly? What kind of ramifications could possibly come from that?
and that is what I was definitely thinking about when you said put down single. As far as, okay, so if you put down single and you're married, on this document, as long as you file as as being married, you're cool. Like, you're cool. This document, it'll nullify that in a sense.
Mm-hmm.
Now, if you put down that you're single, but you're married, right? You go to your tax preparer and you say that you're single, but you're married. That's gonna fuck everything up. Oh my goodness, I'm sorry.
We'll bleep it out.
I am sorry.
We'll
I'm
bleep it
sorry.
out. It's all
But
good.
that's gonna mess everything up. Now I've had quite a few people try to do that. Come in and say that they're single. I don't have any. I don't have a partner, and this, that, and the other, and we end up filing. And then all of a sudden, because the prior year they filed filing jointly, excuse me, it'll pop up. It'll be a red flag. And then we have to uncover, you'll have to uncover all of those past, your wife or your husband and your kids. And then it'll just be like, okay, it'll be awkward. Now, if you want to continue to pursue and say that you're still single, then that's up to you and the IRS, because they're going to come after you at that point, because you are lying, because you are married, and being married is a legal binding, it's a thing. So
legal binding document.
Yeah, it's a legal binding document that you signed in order to get married. So please keep that in mind when you're filing. File married, filing jointly if you're married.
The secondary option I guess you have is if you're accustomed to being single and now you're recently married and you don't want to be entangled with your partner's tax issues, that's where I would say, you can file single and file single separately because you have a history of filing single.
There you go. If you have a history of filing, yes.
But if you want to be but if you have that heightened level of moral and ethical code, then you just file married, but withhold at a higher single rate. So that way you're still paying as much into the taxes as you possibly can to recoup it on the back end. And I would say look at it almost like a savings account, which is why I always say to people when I was doing taxes at Jackson Hewitt myself out here in Los Angeles, is when it comes to line item 5, which is pretty much you're determining the number of allowances you want to claim, that also reduces the amount of taxes that they withhold from your check. I always say put 0. It doesn't matter if you have 10 kids, 12 kids, 1 kid, put 0. 0, because on the back end we'll get into the child tax credit and all that stuff.
Standard
would be
deductions.
influential as far as maximizing your return. So pay it out. I know a lot of people is like, I want all my money up front. But then you're going to have a bill at the end. And because you've consistently been trying to make sure you're paying all the bills and everyone has what they need throughout the year, you're not even thinking that, I have a bill possibly at the end of the year. So, safe, just go 0.
And I do want to say this because I've experienced this. When you're working for the sole proprietor or a business owner, someone who owns the store, the building, the business, make sure that they actually put zero, because if they're paying you out more money, it's gonna help their business with their tax returns on the back end.
Yeah, they're write-offs.
Exactly. So make sure that they actually put down zero. Because you'll be like, ooh, I put down zero and I'm getting all my money. No, you're not.
Mm-mm.
No, you're not. You're going to owe in the end if you don't make sure that they put down zero, because they're trying to help themselves. So make sure that you really help yourself.
Yeah.
Get a copy of it.
Yeah, double check the double check. Another thing that will, line item 6, it will be another episode. Again, we are dedicated to today shooting 8 podcasts all on taxes. We're trying to get it done. So line item 6 is pretty much additional amount, if any, you want to withhold from each paycheck. This is a topic we'll get into later on because it goes right along with tax evasion and tax avoidance. But pretty much it is just paying additional money into the IRS, that you can just have sheltered somewhere else, and you can recoup that when necessary. So we'll get into that another episode that we're gonna record today. And then line item 7 is I claim exemption from withholding for 2019, since it is 2019. And I certify that I meet both of the following conditions or exemption. I'll let you go ahead and talk about number 7. We'll close that part out.
Okay. So this is the exemptions that you claim throughout the tax year. And an exemption is basically, I hate talking. Anyways, it's like your kids. Like, it's the people within your household that you're using to get this standard deduction or to get your child tax credit. Mm-hmm. So you just want to make sure that you mark down how many that you might have or that you claim for that year, because it could be like a nephew or a niece or someone that you have sheltered, you have provided for throughout that tax year. So make sure that you're getting all of the credits that you can possibly get, so you can get that highest refund from your tax preparer or from the IRS.
Yeah. So that is going to be it that we're going to talk about for the W4. For the simply fact that we want you to go ahead and join the Dub Club on Patreon, in which we'll discuss in further details the personal allowance worksheet that will be putting that episode out later on, and two owners multiple jobs worksheet as well. So get on Patreon, join the Dub Club, and we'll get you that information as well. So next thing we're going to smoothly transition to is what comes at the end of the year, when you've done all the work you can possibly do. You've been working hard. You've been working hard, and you want to get that big paycheck come February, come April, depending on how quickly you decide to file. Because I know you could file in December. You can file it a little bit early based off
Don't let the government shut down, no.
So, yeah.
It switches the whole tax calendar. I'm trying to tell you.
Mm-hmm. That happened last year.
Yeah.
Got the extension, pushed everyone's child tax credit, pushed that further back, because there's a date of February the 15th, somewhere around there.
Right after Valentine's
is when you should start seeing your money come in, if you claim that, as well as the earned income credit as well.
Exactly.
But anyway.
One thing that we will put in, it's like, I forget the website, but it does have a tax calendar, because I know a lot of my clients in the past, they're preparing for a birthday, or a lot of single mothers, they're preparing for their birthday and their vacation, and they need this refund money, to enjoy themselves. So I want you guys to be prepared, in a sense of when I can expect this money to come in. I'm telling you, I've been using this calendar for 3 or 4 years, and it is accurate. It's very accurate. So I just want you guys to be at peace. Whenever you do put your return in, you'll know exactly when you're getting that money back.
Yeah, so we'll drop that information in the link below as far as the podcast, and we'll attach it to the overall description when we post on Facebook and YouTube.
Yes.
So we'll make sure you guys get that information. That is something I did not know, and I think I'm going to use that myself.
Oh yeah, for sure.
Yeah, I think I'm going to use that myself. But it is the end of the year. You're feasting and waiting for this W-2.
Boy.
Some employers, some companies just be waiting to that last day, January 31st, to send it out.
Yeah.
And it's just like, So the good thing is you have Jackson Hewitt. I know for sure because I used to be employed there. They will go off your very, very last pay stub of the year, which could be the 18th, could be the 21st. Could even be the 5th if you get paid once a month at the beginning of the month, and you'll be able to file based off of your pay stub.
Mm-hmm.
But again, when you do that, you gotta come back now. You gotta come back with that W-2 because it is not official until that W-2 has been submitted. I would just throw another analogy out there. It's kind of like when you apply for a house. You got the pre-approval based off the information you provided, but then you're actually approved, and that could be a completely different number. Well, I was pre-approved for 678. Now I'm only approved for 300,000. What happened? Well, we had to go back and make sure what you provided was accurate with the correct documentation. So think of it like this as well. You got that pay stub, but that W-2 may reflect a little bit different because it's all the whole entire year.
Mm-hmm.
And the retirement and the different things that you've been paying into doesn't necessarily show on that pay stub.
Yes. Yes, you always want to make sure that, once again, going back, and I don't want to harp on sole proprietors or just business owners, but you do have to make sure that the document is formal. Like they actually have a business EIN, and they're sending their stuff through the IRS in order to get your formal W-2. I've seen some fake W-2s from fake companies with no EIN number. I've dealt with people who came in with these, and I'm just like, man, the business owner is messing with your finances, for lack of a better word or a better phrase.
You cash all year.
Yeah.
But they've been taking money out this whole time. Yeah, for themselves.
They have.
For themselves.
Please make sure it is a real document, and you'll know because it'll have I forget the word, but prorated edges, like
perforated pages.
So you'll be able to tear the document. It'll come official.
Some will say ADP on there, so there's different ways to back check and double check, and you can also go online yourself, irs.gov, and type in the EIN number.
Yes.
Make sure the company is registered and active.
Yes.
So protect yourself. Always do that. But we're gonna break down the W-2.
Let's get into it.
Just a little bit. So we got box number 1, that's simple. So any wages, that's pretty much the entirety of what you've earned throughout the whole year. That includes tips as well, and other ways that have paid you, whether it be like a bonus or quarterly thing. That would be for like waitresses for the tips. You have a lot of those, or...
So I would like, not to cut you off, I would like to explain, especially the waiters. All my waiters out there, I'm a former one as well, so I understand. Now, the tips that are included in box number 1 is the house, what the house gets paid off top from gratuity. That is included in box number 1. Now the allocated tips is box number 8, which is the one that we as waiters are supposed to. Yes. Okay. You're supposed to report. Now it's over a certain amount. I believe it may have changed. Don't quote me. It's around 500 to 1,000. If you earn over that, you gotta report that. If it's under it, go ahead and keep that. You know, keep it for yourself. Like for real.
Put it in the front pocket, not the back pocket.
Not the
You
back.
want to make sure you got it on you.
Yeah, but I just wanted to make that clear. The tips is from gratuity that is already included in your check and everything like that. Anything that they handed you after that, that's what you're supposed to report in box number 8.
Okay, got it. So we're gonna head over to box number 2, which is the federal income tax withheld. That follows from which form?
The W4.
Come on now. We gotta fill it out right. Make sure.
Yes.
So pretty much that is a basis of what you could potentially get back.
Yeah, you can most definitely go off of that. Now, oh man, I don't know what example I do want to use, but say that you made 20,000 this year. When you open up your W-2 and you see $900 in box number 2, it's not looking too good. Just right off top, it's not looking too good. Depending on if you're single,
How you did that
you know,
W4.
how you did the W-4,
Mhm.
and if you're married or not. Now, for the married couples, you understand that you had the number of allowances, so you got most of your check back. You're gonna be fine. You know, you're gonna be fine. We'll get into the child tax credit. All my single people, you're not. So, that means that they didn't. Whoever the HR person or the business owner, they didn't actually put down 0, because it should be around $1,200 to $1,300 in box number 2 if you made 20,000.
Which is around about like 10%, somewhere
Yes.
around there.
Most definitely.
Want to make sure that makes sense. Okay, box number 3 though, Social Security wages. That usually equals exactly box number 1. They're supposed to be the same because 2 different type of percentages are being allocated to box number 2, and then where it says box number 4, Social Security taxes withheld. Now, I will say number 4, you don't get that money back. You don't get it when you file. I'm sorry. A lot of people used to come in and be like, well, when you add this and that, that's how much I should get. The 2 and 4, that's it. That's it right there. And you gotta add Medicare tax. I'm like, oh no, my brother, that's when you retire. That's for when you retire. You got a little bit more. You got another 40 years. So yeah, always know that ain't money you're getting now. That's money you get on the back end when the SSA get to kicking in. when you done put in your 40 credits.
Now, for teachers, anyone who works for a church or a nonprofit organization, your W-2 is going to look totally different. You're not going to have, I believe it's the Social Security. Like the Social Security and so box number 4 and box number 6 is gonna look different. It's good. You may not have anything taken out, and that's totally fine. That's
Because they're exempt.
Yeah,
They're
because you guys
exempt.
are exempt organizations from those, and they're doing your retirement totally different depending on what organization they're already partnered up with.
Which means it could be a 403B instead of the traditional 401k that we're all putting our money into as much as we possibly can. That is advice. If you're not doing it, please do it. But yeah, so we got box number 7, Social Security tips. Let's go ahead and get it.
Man, to be honest, I don't.
Oh, it's all good. Like I said, this is a
know
lot of
that.
information for us. So we're gonna research it real quick, see if we can find something out. W2.
So it's same for anyone who is involved with the job. I just said waiters the last time. It could be hairdressers, um, barbers,
Yeah.
people that are in those fields. If you have tip money, you have to allocate your own tips to Social Security, to Medicare. Depending on if you want to do that, you would show that or reflect that through your W-2.
Now, does that have anything to do with the self-employment tax you gotta pay every quarter?
Oh, that's most definitely works hand in hand with that.
Okay.
If you are, if you are the hairdresser, if you are the barber. So yeah, most
Okay,
definitely.
okay, cool. So now we got number 10 with dependent care benefits. So when you sign up with your employer, sometimes they do have where you can pay into it, and they, from my experience, siphon some of that money that you put out to help contributions for payments for daycare expenses while you're at work. So that is something that will be included in line item number 10.
And please, if you're sending your kids to daycare or any after-school program that costs, please make sure that you get their EIN number and get some type of ledger or document stating how much you paid, because you will get a percentage of that money back. You will
Make
get
sure
that
it's
back.
on letterhead too. Make sure
Yes.
it's on letterhead, because your tax preparer will more than likely scan that document in as well.
Yes.
So
It
make sure
has
you
to
got
be
it.
official. You
Yeah.
have to have the EIN number and the amount. It has to be written down. Please don't forget that. That's the hardest thing for me to say to a single mother. It's like, I can't take it. I can't give you this credit. You can't get that extra chunk of money on your refund if you don't have the EIN. We can't make that up. That's all I'm saying. That's what I'm saying.
Yeah,
We can't make that
Ain't
up.
gonna put your EA on the line,
Yeah, I
your
can't.
CPA, your tax preparer on the line. It's not what's best practice. That's not good practice to do that now. On the happenstance chance
You
that
get audited.
that your number get pulled, you get audited. Yeah, it ain't gonna be good. We talking about levies, automatic garnishments from the check, on the top end, not the back end. So before the taxes get taken out, they taking their tax on tax. Then you go from your benefits, so you're gonna be left. You're gonna be left walking on one leg. You don't want that.
Or single fathers.
Yeah, single fathers. Yes, indeed. So the rest lines 11, 12, 13 is pretty much where you're investing for tomorrow.
Yes, and this is for all of our corporate brothers and sisters. You know, they manage a lot of that for you as far as allocating these numbers. If you do want to take control of that, please go to HR and make sure that either you have your own retirement plan or your own Roth account, IRAs, all of that nature, and you want to handle that money yourself. Make sure that you go and talk to them. But usually these numbers are for, all of our people out there with a career.
Okay. Please make those contributions though. Please do it. We've talked about it a few times on Facebook. We've done a lot of article reviews about the benefits and importance of 401ks, the contribution, and on when you're starting to distribute them back to yourself.
Yes.
And how that affects you when you still gotta file taxes.
And I do want to say it's not only for people with careers. If you do want to take advantage or just get in the habit of practicing this. I know that one of my good friends, her mother taught her to do this when she was working at McDonald's. Like, she would put money into her retirement, her emergency funds, or all of these things. Like, and she was working at McDonald's, so she was preparing herself for her career.
Yeah.
And now she has money set up.
And we're talking about not relying on your employer to do it, but for
Exactly.
you going to wherever you bank at and see how they manage or even offer traditional or Roth IRAs. And then furthermore, there are SEP IRAs for those who are self-employed. So they put that money aside for themselves also. And again, we've talked about it many, many times because we stress the importance of tomorrow. Because our motto here at Wilson Financial is
Right.
you're always focusing on tomorrow, not today. So we always are stressing, giving new information, how to reach $1 million, 2 million, only make 45 a year. You can still achieve $1 million in your retirement. You just gotta start early. If you're a little late, then you gotta contribute a little more. But it's still able to be done. And then we got box 14, that's usually for the SDI. And so
yeah.
I'll let you go ahead and talk about the SDI.
All I know is 14. Whenever my truck drivers, or construction workers, or anyone in that realm, you will have these certain type of.
It's insurances pretty much.
Yeah,
state disability insurances that you've paid into. So just in case you end up getting hurt, if you're part of a union, you're paying those dues, that's in there. You have health insurance premiums that are also in there as well. And if you receive any educational assistance payments as well. So it's pretty much dedicated to that. In case of injury, you have money that you paid into that you can withdraw off of, on top of, what your job will do, whether they pay you 100% or 60% of your normal base income. So that's pretty much what that box is dedicated for box number 14. Then we're going on to the state. That's state line 15 through 20. 15 through 20.
Boy, did I love working in Houston. Shout out to Houston.
Now, what's so special about Texas and the state tax? So we let the people know.
There is none.
None.
None. No state taxes. You get that much more money in your paycheck, but we in California.
Yeah, we're out here in California.
We in California.
Gotta pay that tax on tax and
tax. But now to explain this, state tax, it goes back into our roads, it goes to our parks, our communities.
Yeah.
Most definitely, so that you'll know at least what you're paying into from that standpoint. So
and education, you got high schools.
Definitely pays for your teachers, the bus drivers.
Yeah.
The counselors, things of that nature.
Yeah.
For sure.
But I think there are some people out there running for office that want to have that trickle on over to college. Some of them out there are shouting out free college. So Bernie Sanders shouting that out.
Shameless
free college.
plug. Shameless plug.
So yeah, you have folks like that, and then you got people like Elizabeth Warren trying to set you free of the debt based on your income.
Don't sound too bad to me.
Yeah, I know, because that would leave me with only $3,000. So I can drop that right now on the credit card. Not possible though. They only take it from your account. You can't do it with your credit card.
And don't do that.
Yeah. Oh, I'm a point hustler. I'll be trying to get all the points. That's 8,000 points right there. But yeah, only with your account you're able to pay for that. But yeah, we'll just have to pay attention on that end, because that is completely different than taxes. Just have to throw a little breather in there, because this is a lot of information that we're bringing to the table. But we just want to feel we started out with it, but we want to dive a little bit further into the reasonings or what comes out of filing single, married filing jointly, separate, things of that nature. Because what goes in line with that when it comes to getting your 1040, which we'll be talking about later on, is the standard deduction. So that standard deduction has drastically changed.
Yeah.
Drastically. because we used to have standard deductions and the PEs, which is the personal exemptions, 4,050 per on that return.
Mm-hmm.
And so that has been removed under the Jobs and Tax Cut Act that was passed under the Trump administration. So they increased it and removed personal exemptions.
Yeah, they increased it a lot. So what's funny about this,
Which
now,
is good and bad.
We'll
Talk about the bad, but let you go ahead.
And so, like, that's exactly why I was like, it's funny, you know, for those who own businesses, and this was the benefit of being, you know, a sole proprietor, or just a small business owner. Let me start using that. So, because you had personal exemptions, you could you could cheat. You know what I'm saying? You could have a whole lot of personal exemptions,
Mm-hmm.
rack that up, get
Yeah.
it above, because usually you'll file single as a single business owner, so that so like the old standard deduction was just like 5,300 for a single person.
You talking about 2017?
Yeah.
It was 6,350.
6,350. Okay, 6,350. So personal exemptions. If the amount of money that you spent outside of, well, like on anything pertaining to your line of business, if it exceeded $6,300, and I'm talking, you know, supplies for that business. I'm talking about gas, maintenance, cell phone bills, vacations, even food in some cases. If it exceeded that 6,300
Meals
mark,
and entertainment, when we talking about food, you're
Mhm.
taking people out for business purposes.
yes. So it could possibly rack up to $12,000 or 18,000, and that would help. I'm talking about help that
Reduce
refund.
the taxable income.
Mhm.
Pretty much reduce that.
But now that the standard deduction is so high, it's kind of impossible to exceed it, which
Yeah.
eliminates that.
Yeah,
Is
and
the point.
that has greatly affected churches as well, because a lot of
Mhm.
people used to gear around, unfortunately, gear around what the standard deduction is and ensure that they exceed that. So that way, at least on the charitable contributions and donations, they've already exceeded it, plus on whatever, you know, they paid into it as well.
Mhm.
So now, that ain't the case. Because it's very difficult for a lot of people to exceed 24,400 within a year if you're married, filing jointly,
Exactly.
contributing towards a church or towards Salvation Army or whatever
Or-
nonprofit organization.
Or if you're just head of household and you have people that you're taking care of, it's hard to exceed that 18,000.
Yeah, 18,350.
And I've sat down with people, I'm just like, ooh, you know, the number didn't look right to them, to the previous refund. So I would go back and be like, ooh, that number was that, and now it's only this. Let's see if I can work with you or add up, tally up how much you spent in those areas we said previously still didn't work. So it's like,
Yeah,
It's
it's difficult
difficult.
because if you're making 24,000, you can't put on there that you gave to your church 16,000. How you live?
mm-hmm.
What rent were you paying? $100 a month? Where that at? I need to be there too.
Yeah.
So that throws up a huge red flag when over 50% of your income you gave out to just trying to beat. Now
Mhm.
that causes for a huge audit as well. So pretty much, just to go through it, we're gonna go back to 2017. It was 6,350 for single people.
Mm-hmm.
Now it's 12,200
Mm-hmm.
in 2019. It was 9,350 if you're a head of household in 2017, 2
Mhm.
years ago, and now if you're a head of household, it is 18,350. Now we're seeing how many, the reason why millions of people are not itemizing. because it's difficult to exceed that. You were at, what was it, 24,000 married jointly in 2017. Now you're at 24,400, $400 increase. But yeah, that is
Yeah.
those are huge changes. Millions and millions of people are now just having to settle with the standard deduction because it's so difficult to exceed it. And then you're additionally capped when it comes to property tax, because that would be like another scapegoat, kind of. If you're in a
Loophole.
yeah, another loophole. If you're in living in a high state, a high, I don't want to say this, high property state, pretty much.
Yeah.
So you got California, you got
Texas.
New York, you got Florida, where the taxes are pretty high as far as property tax. But now you're capped at 10,000 thanks to SALT. So now that makes it even, a little bit more difficult to try to exceed that standard deduction as well. So that's pretty much all we have to bring. If you have additional questions, again, you can always send them over to info@wilsonfinancialmgmt.com. Any questions on this topic or any other topic that has to do with taxes, we're more than likely going to get into it, but you can still ask it anyways.
Last thing with this. Thank you, I almost forgot. Standard deduction. Now, the good thing about it is, if you, per se it was just the 6,300 in 2017, now it's 12,000. It is extremely beneficial, especially if you put 0 on
The
your
W-4.
Because if you don't put 0 and you're single, woo, it's gonna come back on you. Like, because that standard deduction is so high, it helps you out. It helps you out. And then on top, if you put 0, they're taking out the most that they can. So now with that help, you already started off with that. Now you put 0, you about to get a whole lot more back. Now, if you, cause they giving you that help, they giving you that 12, 12,000.
Or 18.
Or 18.
If you have a child.
Now, throughout the year, you're like, oh, okay, I want my money. They're giving you that help, so it's gonna take away from you on the back end, and now you owe. And you don't want to do that.
Unless you want the IRS to be your best friend, because they'll come knocking.
Yes, they will. You don't, just so please stressing, because it happened to me. I worked for, I had 3 different jobs, and one of them, even though I said I wanted 0, they weren't used to looking at it that way. So they put 1. It was like, oh, because,
Because it's just you.
Yeah, it's
you
just
have
you,
that
you're
option
single.
of putting that on there.
So
It's just you can put
that's one allowance, but it messed up my refund. I didn't get the total benefit of that 12,000. I took from it unconsciously, unknowingly.
Yeah, about 50% of it.
And it hurt me in the end. So please, I'm stressing that again.
Yeah. But again, we're going to close this one out. Any questions? Shoot it over. info@wilsonfinancialmgmt.com. That's info@wilsonfinancialmgmt.com. Thank you guys for joining. Always go ahead and head over and support so we can bring more content, add special effects. We can't do that without resources. So head over to the Dub Club. Join the Dub Club on Patreon. We appreciate it. You'll also be getting discounts on merch that'll be coming out pretty soon. So that's another exciting thing. So thank you for joining. Later.